Good afternoon, everybody. Phil Simons with Columbia Grain here, and your Friday afternoon weekly grain market recap. Well, we did have the Stats Canada numbers come out on Monday, which definitely put a little bit of a negative spin on the markets as we got things kicked off to start on Monday. So I'm going to share my screen with you, and we're going to go navigate over to our favorite website, columbiagrain.com. And in the upper right-hand corner, let's go to the Producer Solutions tab, which will take you to our Producer Solutions link. But again, we did have the Stats Canada numbers come out on Monday, and again, they did have a fairly negative tone, which did kind of underpin the markets a little bit here this week in terms of futures movements. But on Monday, they did release the production numbers for the 24-25 crop. And when we look at what the all wheat production is potential to be up in Canada, we see the numbers that they had, which was at 34.2 million metric tons. When we compare that to the 5-year average, the 5-year average is at 31.6 million metric tons for all wheat production. So in all reality, the numbers this year, they have potential to be about 2.5 million metric tons above the 5-year average that we have seen being produced up in Canada. So again, just putting a little bit of a negative spin, on the overall futures markets and the ranges that we saw here this week. To take it a little bit further, when we look at the durum potential crop, again, that's actually coming in at 1.1 million metric tons above the 5-year average that we've seen out of Canadian production. So again, just putting a little bit more of a negative spin out there. Similar fashion, when we look at corn up in Canada, it was a little under 1 million metric tons higher, again, than the 5-year average. So again, just trying to really signal to the markets again that there's plenty of wheats and commodities in the world that we still need to continue to chew through. But again, on Monday, we also had the crop progress report. We take a look at what the winter wheat percent planted was, actually coming in pretty good, right on average, quite honestly, and some timely rains are definitely nice to see as they're aiding the seed that's getting into the ground right now. Similar fashion when we look at corn harvest or corn, actually being harvested right now, actually coming in at 9%. This week, and when you take a look and compare that to where we were last year, we're at 6% last year at this point in time. So a little bit ahead, but still just starting to scratch the ground out there. And right now with soybeans percent harvested, we're coming in at 6% versus 3% where we were last year. So again, just starting to scratch around and get things going there. But again, when we take a look at what the Stats Canada numbers along with the U.S. Supply and demand numbers, realistically want to look out for new crop opportunities and where do we start pulling the trigger. So I did want to kind of look at wheat specifically. We start looking at Chicago wheat, Chicago September 25, just trying to come up with some pricing points to look at for potential new crop, either HTA contracts or accumulator contracts. And right now, after we've seen the most recent low in Chicago, at least, we have rallied, close to 50 to 60 cents off of those lows. But when we look at where do we want to start pulling the trigger, simply looking at where we've seen past resistance with Chicago September 25, we did reach the first pricing point close to $6.25. And again, looking to be a scale-up seller and have some just good till cancel orders resting out there. We would start right around 6.25, which is where we had been late last week, and we did touch it again here today. But then again, if and when we get up to close to 650, I'd be looking to pull the trigger on a little bit more. And if we get close to $7 for September 25 futures, I would definitely be a very active seller if we were to get up to those kind of prices. Again, looking at both hedge to arrive contracts along with accumulator contracts. Remember, time is your friend when it comes to the accumulator contract, because the more time that we have associated with those specific types of contracts, potentially the higher the premium that you're going to be generating. Right now, when we look out to September 25 or December 25, for a lot of our accumulator contracts, we're still, right around a 30, maybe even a 40 to 45 cent premium over your traditional hedge to arrive values. So definitely take a look at those. Same fashion, when we look at Kansas September 25, we've seen a fairly decent run once we kind of bottomed out there, about a 50 to 60 cent run to the upside from where we had been. But again, trying to figure out where do we look to pull the trigger on some of our new crop sales as we are getting seed in the ground. Once that seed's in the ground, we're essentially we are long wheat, so we need to start looking at where do we take advantage of these prices. Right now, again, kind of looking to be a scale up seller. If we get to 625, look to be doing hedge to arrive or accumulator contracts again. And again, if we get to 650, do a little bit more. If we get to $7, I definitely would be selling a little bit more aggressively. And if we were able to get up to 750 in that area, I would be aggressively selling Kansas September 25 futures, just to take some of that additional risk off the table as we do get the seed in the ground. So again, just what we've been seeing in terms of overall volatility in the markets and the knee-jerk reactions and the amount of supply and demand numbers that continue to really kind of hinder the market, it's definitely important to be taking a look at where do we want to be pulling the trigger for new crop sales, just to get those sales on. When we look at what actually happened this week in futures action, we start again with December corn. We actually had a weekly range of 14 cents over there and closed out today with a net weekly loss of 12 cents in DEES 24 corn. In NOVE 24 beans, we actually had a 23-cent range there. Actually able to hold on to 7 cents of that overall range. So that was the only bright spot in the commodity complex in terms of actually trading and closing with a weekly gain. When we turn the page and look at the wheat complex, Kansas DEES had an overall weekly range of 37 cents, actually closed with a net loss of 34 cents week on week. Chicago December, we had a 32-cent range there, actually closed the week out with a net loss of 26 cents. And in Minneapolis, we had an overall range of 27 cents and closing the week out with a net loss of 21 cents in the Minneapolis pit. So again, just trying to emphasize the importance of getting your orders out there and working specifically on new crop, and where do we take advantage of these knee-jerk reactions as they continue to occur, and especially when we look at the fundamental factors that continue to hit the markets and really drive things down. Other than that, we're going to go ahead and wrap everything up for the weekend here. I hope everybody has a great weekend, safe planning, safe potential harvest for those up in North Dakota as well. Other than that, we are going to wrap everything up. And remember, if you can drink it, don't trade it. Have a great weekend, everybody. We'll talk with you next week.